What's up, guys? My name is Austin, and you're watching Econometrics with Austin. So today we've got some big news regarding stimulus. President Trump announced a $1.3 trillion stimulus plan that includes $550 billion in transfer payments and payroll tax cuts, $200 to $300 billion in small business assistance loans, and $50 to $100 billion in airline and industry relief. As you can see, $1 trillion is a lot of money. It's an absolutely insane amount of money, but that's what we need. The economy's hurting, and that's what his plan is. We'll see if it gets through. It's just a plan right now. Still has to go through the House and Senate to get passed. But so, what exactly does this mean for the everyday American? What does this mean for you? So, President Trump is considering sending every American a transfer payment of $1,000. And the reason why he's wanting to do this is because when people will get this check, the idea is that they'll go out and spend the money. And by spending it, they'll help the economy by pumping extra money into the economy and supporting businesses that are really hurting right now due to everybody staying home and not spending money. So the idea is that 90% of the money will be spent and 10% will be saved. So whenever you get this $1,000, the idea is that you'll go out and spend 900 of it and you'll keep 100, put it in your bank account. And then the process is repeated. That business that you spent the money with, they'll go out and spend 90%, either that's paying employees or rent, whatever they're doing, and they'll save 10. And then wherever they pay to, they'll do the same. So it trickles down until there's eventually no money left. But what this does is it boosts the economy, and it helps both the consumer and the producer. It helps you because you've got $1,000 to do what you want with, and it helps producers because you're going out and spending that money. So that's the idea. In the past, it's worked. It's kind of person to person. Some people would rather just save the $1,000, which does not help the economy. Other people love to spend money just like a tax rebate. They go out and buy all kinds of stuff with it. But anyways, he also wants to have a payroll tax cut. It works very similar to this, except that it directly benefits employees and employers. And the way that works is because both you and your employer pay 6.2% in payroll taxes. So you will see a small bump in your paycheck. Your paycheck will increase every week, 2 weeks, month, whenever you get paid. And employers will have a smaller tax burden. And what that does is it frees up cash for them to go pay other fixed costs like rent, utilities, whatever fixed costs that they have. And he's also wanting to help employers, once again, a $200 to $300 billion in small business loans. So that's going to help small businesses with liquidity, and the goal there is to prevent small businesses from going bankrupt and to keep them from laying off employees. So earlier today, the U.S. Treasury Secretary Steve Mnuchin said that without this stimulus package, we could see 20% unemployment in the United States. 20% unemployment is absolutely crazy, something that we haven't seen in the U.S. since the Great Depression. So it's very important that we get this stimulus package passed through and that it also works, because if it doesn't work, then it's just a waste of money. And then Trump is also wanting to give $50 to $100 billion in airline and industry relief. And just like I said yesterday, the airlines and travel-related industries like the cruise ships, hotels, even restaurants included, they've been severely hurt by the coronavirus. And this stimulus package here was going to keep them afloat until they get through these trying times. And that's what I was saying yesterday. You need to watch out for that, because whenever this looks like it's going through, you best believe that cruise line stock and airline stock, hotel stock, whoever, mostly I would say airline. Those are the main ones I would watch for. Their price is going to skyrocket. And also today, the Fed announced that they will be offering 2 rounds of $500 billion in repo every day for the rest of the week. We talked about this yesterday and what that means. They'll be buying back bonds. So what pretty much by them doing this is that the Fed is offering infinity liquidity. $1 trillion a day spend is what they have to spend every day. $1 trillion pretty much is infinite, because there's not that much debt out there that people are wanting to liquidate. So they're pretty much saying, hey, if you need liquidity, come to us. We got you covered. So the question is, what am I going to do with this $1,000 check? Because I expect to get one. Maybe I won't. We're not sure of the guidelines exactly on who will get one, but it was supposed to go to every American that makes less than 100,000. Might change. Who knows? So what I'm looking for is I've got hopefully this $1,000 coming and another $2,700 in my tax refund that are coming. So what I'm going to do is I've got these 3 stocks picked out: Dow, United, and Occidental Petroleum. Those are the 3 stocks that I have picked out, and I plan on probably putting $1,000 in Dow, $1,000 in United, and $500 in Oxy. And then we'll see where the rest goes. So the first one I picked out is OXY, Occidental Petroleum. So currently I have 15 shares of OXY, and I kind of bought it on a whim the other day. I had money left over in my Fidelity account, and I was just like, we'll buy it. So they are a petroleum company, which is a little bit sketchy right now. But that's why I'm only thinking $500 and not going in with a full $1,000. Is just because of the oil price, and we're not 100% sure what's going to happen with that. But as you can see, they were trading at $47, and currently they're at $11.37 is where they're trading currently. So I mean, that's a huge dip. That's 76%. They've lost 76% of their value in a little over a month. That is absolutely crazy, and that's one reason I picked this company, is because there is a huge upside if oil prices come back up, and if they don't go out of business. That's the big worry right now. The upside potential on this stock is absolutely huge. And if you look at their beta, like I was saying earlier, they're very risky. Beta is a measurement of risk. Their beta is a 1.76, which means they're 1.76 times more volatile than the market. And so what makes them so enticing, like I was saying, is the huge upside, but also because they're currently paying a 26% dividend. 26%. That is absolutely crazy, and something that you do not see. You definitely don't see a 26% dividend. And that makes them very attractive because in 4 years, a little under, I'll recoup my whole investment, and everything else is profit. There's nowhere else that you can get a 25% return on your investment year over year. Now, will they cut this dividend? More than likely, because the oil prices has absolutely tanked and they're not doing the best right now. But if oil comes back up and that dividend jumps back up, then it's going to be great. And here's their dividend reporting currently. It shows 22.16%. That's back from the 9th. But as you can see, they're paying 79 cents per share per quarter. And they're only trading at $11 right now. That's pretty good. That's really, really good. So my second pick is Dow. And this isn't the Dow Jones. This is Dow Incorporated. I'm thinking about putting probably $1,000 into them, maybe a little more. And Dow is a material science and chemicals company. And once again, reasoning on this is because Dow is down 56% from highs this year. And once again, that gives you huge upside potential whenever this market turns around. As you can see, they were trading at $55, and they're now down around $26. Huge drop over the last 3 months. And Dow is another high dividend company because they're currently paying a 12.73% dividend. And Dow is a really safe company. They're in the chemical market, but they're well established and they own lots of other companies. And I also have a little bit of inside knowledge that they have a lot of new ag products coming this year and down the line that are going to be big for the industry. But as you can see on their dividends, like I was talking about, this is from the 27th when their price was a little higher. Their dividend yield here is 10.9%. Their prices have dropped drastically since then. And they're now, the dividend rate is 12.73%. And that's the thing, whenever you buy these stocks, whenever they're this low, the dividend rates are going to be huge. If you wait until the price gets back up to $50, the dividend rate will be a lot smaller because the stock is worth more. So it's going to take longer for you to recoup your investment in dividends. So my third and final pick is United Airlines. United has lost 66% of their value. 66%. That is absolutely crazy to lose that much in a 3-month period. 66%. And as you can see, they were trading around $90. They're now at $30. They're at $30. That is 66, almost 67% drop in value in 3 months. That is crazy to me, and that is a huge discount. And with United, I expect them to fall a little more. I don't think they're going to go up tomorrow, unless if there's some new stimulus package that comes out, they're going to get a bump. But the real bump is going to be down the road. It's going to be a couple months down the road due to this virus, and it's going to take a while for us to get over it. But once we get over it and people start flying again and the data starts coming in that they're doing better, the price is going to go up, and the upside on this one is absolutely huge. I'm going to put $1,000 into it. And you know me, I'm a buy when it's low and cost average. If you already own stock, like I own some of Bayer from a couple years ago, was doing horrible. So I dollar cost averaged in at the low of like $12 last week. And now I'm making money as it goes up while also reducing the loss from the original purchase. So dollar cost average, if you already own a position in a company, this is the time to dollar cost average in. Dollar cost average, that's the best thing to do right now. Buy when it's low. Most things are down 30%. Buy it. It's like getting your favorite thing, like your dream car or whatever, for 30% off. Except this makes you money. And the thing with United, they don't offer dividends. As you can see, the last time they paid a dividend was in 2008 during I'd say that's probably right before or during the financial crisis. So they don't have a dividend, but the upside potential from having such a low price and a trusted company like United, you know their stock price is just going to go up once this pandemic is over with. Anyways, guys, the thing I'm going to leave you off with today, the Dow Jones Industrial Average, it climbed about a third of the way out of the hole it made yesterday. So it was up 1,048 points, or about 5.2% today, making this, now get this, the 7th day in a row that the Dow Jones Industrial Average has moved over 1,000 points. That is absolutely insane. We're living in historic times where in 7 days in a row, it's either gone up or down by 1,000 points in a single day. And it's not intraday. It's closed. It's closed for 7 days in a row, either 1,000 points up or 1,000 points down. Absolutely crazy. And it looks like now the Dow futures are trading down 450 points. So more than likely tomorrow we're going to have another down day. See, what is tomorrow? Tomorrow's Wednesday. Wednesday down, Thursday up, Friday down. Unless there's some type of stimulus announced, then we'll see some improvement. That's for sure. But anyways, guys, thanks for watching. Be sure to like the video and subscribe if you like what I'm doing. You like the content. Be sure to subscribe. It helps me out more than you know. And I'll see you tomorrow in the next video.